The AI revolution is absolutely everywhere. But behind all the cool algorithms and the mind-bending code, there's a world of heavy-duty, real-world hardware that makes it all possible. Today, we're going to dive into a company making a massive, massive bet on the physical stuff, the infrastructure that's going to power our AI future. And it all starts with a number you are not going to forget. $9.5 billion. Just let that number sink in for a second. That is the price tag on one of the biggest bets we have ever seen on the physical foundation of artificial intelligence.
So what's all that cash for? Well, Eaton, which is this giant in power management, is buying a company called Boyd Thermal, a global leader in a very specific and now very critical technology, liquid cooling.
But that's the big question, isn't it? Why would a power company spend nearly $10 billion on a cooling company? To really get that, we need to look at a fundamental problem that's right at the heart of this whole AI boom.
It really all comes down to some basic physics. The very thing that makes AI so incredibly powerful also creates this massive, massive challenge. Just intense, concentrated heat. Just look at this trend line. The amount of power needed for server racks it's skyrocketing. The newest AI chips from companies like NVIDIA are unbelievably thirsty for electricity, and that's causing this huge jump in the kilowatts you need for just a single rack. And all that power? Well, it has a direct consequence. Heat. A lot of it. Once you get past about 50 kilowatts per rack, the old way of doing things, just blowing air on it, it just can't keep up. The chips get way too hot, performance tanks, and they just don't last as long. Now, this physical problem has created an absolutely explosive new market. The forecast for liquid cooling in data centers is just staggering. We're talking a projected 35% compound annual growth rate through 2028. This isn't some tiny niche anymore, it's a flat-out necessity. And that is the multi-billion-dollar opportunity that Eaton is chasing.
Okay, but to make a nearly $10 billion bet, you need some serious financial firepower. So how in the world can Eaton afford a move this big? Well, their latest quarterly results, they pretty much tell the whole story.
Try this on for size. In a single quarter, Eaton brought in a record $7 billion in sales. This is not a company that's struggling. This is a financial powerhouse with the cash to make some really big moves. And get this, that's a 10% increase over the same time last year. We're talking solid, consistent growth, which shows there's huge demand for what they're selling. Their efficiency is just as impressive, a record 25% for their operating margins. All that means is that they are exceptionally profitable. They're turning a huge chunk of all those sales directly into profit. And here it is. Here is the engine that's driving all that performance. Orders for their data center business in the Americas are up, wait for it, roughly 70%. 70 in just one quarter compared to last year. The demand from the AI boom is just flooding their order books. So yeah, the whole picture is crystal clear. Sales, profit, earnings per share, everything is up and up big. This is the kind of financial strength that gives a company the confidence and the capital to not just ride the AI wave, but to invest heavily in shaping where it goes next. So now we've got the two big pieces of the puzzle, right? You've got a massive technical problem with heat and AI data centers, and you've got this super strong company looking for a way to solve it. This is where the whole strategy really clicks together. The strategy is all about controlling both sides of the energy equation. It's really elegant. See, Eaton manages the immense power going into the data center, and now with Boyd, they manage the intense heat coming out of the chips. It's just a perfect synergy. And Eaton isn't just buying some small-time player here. They're acquiring a global leader with a whole portfolio of critical technologies. Coolant distribution units, direct-to-chip cold plates, high-performance heat exchangers. This is the absolute cutting edge of managing heat. And hey, you don't have to take my word for it. This is straight from the top. Eaton's CEO, Paulo Ruiz, calls this a generational growth opportunity. This isn't some short-term play for them. It's a long-term vision to become a foundational company for this entire AI and digitalization megatrend. This right here, this brings us to their end goal, a complete, totally integrated solution. With Boyd in the picture, Eaton can now offer products that manage literally everything, from the power grid outside the building all the way down to the tiny cooling plate that sits right on the AI chip. They want to be the one-stop shop for building an AI data center. Okay, so the strategy is clear, it makes a ton of sense, but what does the immediate future look like? Well, the company's own data gives us a pretty good idea.
Their forward-looking numbers show some serious momentum. The backlog of orders is up 51% over 2 years. And with a book-to-bill ratio of 1.1, well, that's just a fancy way of saying new orders are coming in faster than they can even fill them. That is a very, very good problem to have. So based on all that momentum, it's no surprise the company has reaffirmed a really strong forecast for the full year. They're expecting high single-digit organic growth, and they're keeping those incredibly strong profit margins. It's just a picture of pure confidence.
Which brings us right back around to our final question. We hear so much about the AI models and the big tech companies creating them, but this $10 billion deal is a good reminder to ask, as AI builds our future, who builds the powerful and cool foundation that it all runs on? It might just be that the biggest winners of this new gold rush are the ones selling the picks, the shovels, and of course, the cooling systems.